Good morning, traders. My name is Christopher Vecchio, currency analyst with Daily FX. Today is Friday, January 24th, 2014, and we're here to talk about the U.S. dollar ahead of the Fed meeting next week. Really what's going on in the dollar right now is not necessarily a story about whether or not the Fed's going to taper. We're seeing a lot of price action that would indicate that we're entering a period of risk on or risk off, and really that's evident by what's happening in, say, some of these broader markets. But let's take a look at the U.S. 10-year Treasury yield, right? This is TNX. This is the 10-year note yield as it is on the exchange, and we see here that we broke the uptrend from the late April, early May, and then those late October, early November swing lows. And so what this would suggest is that if yields are about to pull back, we could see the 10-year yield fall back as far as 2.5%, all right? And that would give, at least based on what's been happening recently, the air that further U.S. dollar weakness may be around the corner. Now, when we take a look at dollar yen has broken the uptrend from the November and January lows. That would open up the floor towards 101.50 or so. We've seen that serve as support, an inflection point in the market. We see the July high comes in there. I don't think we can really say that the dollar yen's losses are over just because, say, we've hit this oversold reading on the chart. The euro dollar is also interesting ahead of this Fed because the euro dollar, which initially was trying to break down through the ascending trend line of the July and November lows, formed a bit of a falling bullish wedge the last several days, and we see it's lurched higher through the first swing high right above 136.50. We see the moving averages start to come back, even though we've seen a bit of a reversal in price the last several hours where the European currencies have come off relative to their commodity counterparts. Overall, price still remains tentatively bullish. So right now, the U.S. dollar overall doesn't look like it's on that great a footing. Again, the backdrop is for weaker U.S. yields. We see the dollar yen breaking down. We see the potential for the euro dollar to start gathering pace. Ultimately, the Fed meeting is going to have to tell us whether or not tapering is going on, irrespective of the potential near-term slowdown in the U.S. economy. And we talk about this back and forth every single day. We have housing data that comes out a bit weaker. Retail sales are a bit better. NFPs miss. It's back and forth right now. So even if the Fed continues to taper through this perceived slowdown or plateau momentarily, it could really give a suggestion that this end of easy liquidity is coming faster than people expect. So we have a number of trade setups for the U.S. dollar. We're predisposed to maybe U.S. dollar weakness with the yield environment weakening. But over the next several days, we certainly expect that these patterns will resolve themselves. Volatility is picking up, and certainly attention to risk management over the next few days will be heightened or necessarily heightened. That's it for me. We'll be back next week to talk about these opportunities as they come and go. Good luck trading for the coming days.